G'day all. As I said a bit earlier on, everybody's on mute. Feel free to click yourself off mute if you want to say anything. I mentioned earlier to those who were already on board. Last time, JobKeeper 1.0, we had about 80 people on board for the Zoom, if you like, tutorial or workshop. I think most people will have noticed when if they've had a look at the rules and regulations around things, that it's going to be a lot more difficult to be part of JobKeeper 2.0. So I think most people have recognised that in their own businesses, and that's perhaps why our numbers today are a lot smaller. But we do have Tony and Ben with us this morning, and I guess, guys, I'll just get you to unmute yourselves if you wouldn't mind, and perhaps we can get started. If anybody wants to ask a question, feel free to do it. But perhaps, Tony, do you want to lead off?
Sure, Doug. Can you hear me? Okay. Can you hear me? Great, excellent, good. Thanks, thanks, Doug. Thanks for everyone coming on board. Thanks, Ben. I just thought we'd tackle today, have a quick look at JobKeeper, refresh ourselves on the eligibility for the existing, and then have a look at the extended, so JobKeeper 2.0. And as Doug flagged there, it's the likelihood of taxpayers being eligible is going to be much less likely, but we'll still go through that because there could be members that that are in that situation. And then I thought we'd have a quick look at the cash flow boost and the practicalities of that, and the tax consequences, both GST and income tax, on both the payments. We've had a few queries on that. Ben, did you want to add anything else to that?
No, no. I'll leave it at that.
and then thanks. And then, as Doug said, if anyone's got any questions, yeah, we'll have a crack at them. We're here now. Let's have a look at it. So just to refresh the JobKeeper, you know, it feels like eons ago now, and the uncertainty at the time. I look back at some of the things, some of the assumptions that I made that were incorrect. Got some right, got some wrong. Most definitely had puzzling outcomes, as we all know now. And a personal example, my eldest son does one day in the car wash per week. You know, normally get about $200 on top for the day, ends up getting $750 or $1,500 for the fortnight. When I ask him to go and do a couple extra shifts, son, he says, "Dad, it's not your money, it's the government's money." So I'm sure we've all got stories like that, but it looks, I know on the East Coast, and I know our business has been where March we were 10% up, crashed and burned in April, to down by 59%, being a function of the traffic going out the front. But then, and I hope this isn't taken the wrong way by those people that are still doing it tough, especially down in the Melbourne area. I'm very conscious of that, albeit in New South Wales. We've been up ever since. So, so just to refresh, that the existing eligibility, which will run through to September. Once you're in, you're in for the duration. You just have to prove, in inverted commas, that your actual or your projected turnover fell by 30% or more. And I'm only talking about the general type of taxpayer, general type of member here. We're not dealing with not-for-profits, and we're not dealing with very large business or consolidated businesses. So that means each month, as you know, you do your reporting, you send it off to the ATO early in the month, but it's not linked to your monthly activity statement or to your quarterly activity statement, commonly known as a BAS. But have no doubt, I believe the ATO will have integrity measures there to go back check that. So rolling on to the extended JobKeeper. Up until this point, does anyone have any questions on that? Okay, great. So rolling on to the extended or JobKeeper 2.0, then the subtle difference is that rather than a projected turnover, it's going to be based upon an actual turnover. So going through from the October, November, December quarter, you have to prove that your actual turnover for the June and for the September quarter actually fell over that 6-month period by the 30% or more. So I think that's where a lot of members will struggle to meet that. The only thinking about this last night, the only time I can think that may be applicable is that you've had a complete lockdown situation that I believe is happening in certain parts of inner Melbourne, and or that you've got some sort of attached business unit, perhaps a cafe that's resulted in that turnover dropping by that amount. So then it's going to be, if you meet that, then by all means, the eligibility, then it will roll on to the next quarter, being the January, February, March quarter. But to be eligible in that quarter, then it's essentially your turnover has to have been down for the 9 months. Your actual turnover has to have been down for the full 9 months compared to the same time, the full 9 months compared to the same time the previous year. That's, I hope I've bounced that off some of my other accountants here. I think I'm on track there. Does that, but thinking back a couple of months back, I got a couple of things wrong on that. So I'm just looking for some affirmation there from if that's coming across in a coherent manner. Okay, cool. Thank you. So in regards to that, then it's the timing of the payment. So as of today, I haven't seen anything from the ATO to say how this is actually going to be reported, because we're shifting from a projected, let's think of it as shifting from a, hey, we're going to take an honour system that was you actually have fallen or that you projected that you were going to fall. This is now going to be actual numbers. And when you think about it, you would normally lodge your BAS, whether that be, or your activity statement, sorry, whether that be monthly or quarterly. But the timing of that for the JobKeeper payment is different. So your typical, if we fast forward to the end of September, you're not going to lodge your activity statement, your quarterly activity statement, your quarterly BAS until we've got an extension up until October. But the payment of the JobKeeper is much sooner than that. So there's no mechanism as of yet on how to do that. But I'm sure the ATO will come up with something on how to report that actual number. And I think there's a good thing there is that and I saw ScoMo come out this morning saying that that they're currently using the payroll data, which is a single touch payroll, as their real-time data collection. So this will back that up on what actually is happening in the economy, especially in small business. So is there any questions on the actual timing? I see that as being the only challenge, to be honest, going forward. No, good, excellent. So then it's going to be in 2 parts. As I said, that December quarter and then the March quarter, that's when it will finish. But if you actually have a look at the payment, just to refresh, the existing is the $1,500 per fortnight. Yes, with those puzzling outcomes, as we said, bit of hit and miss. We've lost some employees and then we've had to replace people, but we don't get JobKeeper for the new people coming on. Is it fair? I don't know, but it just is what it is. But looking at the extended, it's going to be 2-tiered, where in that ending December quarter, of course, being based upon your September actual numbers. It's dropping from the 1,500 down to 1,200 per fortnight for employees that are doing 20 or more hours. For less than 20 hours, this will drop to 750 per fortnight. So hopefully it should stop that skewing of behaviour in the employment market at the moment, where people just don't want to turn up and do shifts. It's well, I just sit at home and pick up my money and not even bother to do another shift. And it has been skewing behaviour there, no doubt. And then rolling on to the next one, finishing in the March quarter, it's going to drop from $1,200 down to $1,000. So it's a bit of a weaning off for 20 hours or more, and under 20 hours, it's going to drop down to $650. So I think that's pretty well straightforward. Just having a quick look at the tax consequences. So with JobKeeper payment, obviously there's no GST on it because there's no taxable supply, but it is taxable income. So yeah, you definitely have to include it in your accounts, and you do have to pay tax on that income. Any questions on that? Ben, you like to throw? I can hand over to yourself. If you've got anything you'd like to add, or
actually, no. I think you've nailed it on the head there. I'm actually personally waiting for a little bit more information back from my accountant, because what you've just told me is my understanding, but I just want to make sure about the mechanisms of how this occurs. And thankfully, we're sitting here not quite August, whereas last time around JobKeeper 1, they kept moving the goalposts on what days it was finishing and what you had to do, and et cetera,
definitely,
and pay that money out. So this time we've actually sort of got almost 2 months to get some clarification from the different departments. But for myself, I'm sitting here thinking, well, I've got two different sides to my business. One where I employ people, and the nature of my business, I have some people in car washes, I have people in hospitality and such. And one of my biggest clients is actually tour guides in the cruise ship industry. So I think I'm going to be well and truly qualified with regards to my wages being down, because I can't see them getting back to work till probably mid next year. So that sort of puts me into that. But then I've got the other ones where we're doing like a managed payroll, and we're sort of working through, because there's some clients that they're in the retail or in the car wash industry, where they're basically got to look very, very closely at what their numbers are. And I wouldn't say there's a fear, but you want to make sure that you tick these things off. Like, I don't know how you guys are going with the JobKeeper scenario at the moment with the single touch payroll, but my acknowledgement back to the government with the reconciliation type thing. So it's one person out, and I've had my staff go back through a couple of times and say, I can't work this out. The advantage for me is it's actually in my favor. Like, I've got all these people on, and then the number is one difference. So I'm just sort of having that scenario where I'm putting away basically $3,000 a month into an account, waiting for the time that I can go back to the tax department and say, here, have your money back, because you've given it to me. There's no way to actually change it in the allocations.
It's not mine, is it, Ben?
Sorry, say that again.
It's not mine, is it?
Yeah.
You're looking for somewhere to put it.
Yeah. No, well, it's just parked at the moment. But that the fear is like the 3,000. This is a job that I'm doing for the government. I'm paying their Centrelink payments for people, but I've got to put this aside, and then when I go to reconcile, it's going to take me probably 3 to 4 hours of my time or my girl's time to make sure that everything gets ticked off. But that's the frustrating part about that is that's unpaid. Like I'm doing them a service. So
that is a good point. That you do go in and check the amount. For most people, it should be relatively straightforward. Number of employees we've had, number of fortnights. But we have as well picked up where incorrect amounts. It's been underpaid. It's been overpaid. It's well worthwhile checking that. And then Ben, as you say, then if you have been overpaid, expect at some point down the track that, 6, 9, 12 months that they might knock on the door and be a case where you just put your hands in the air and say, oh, look, it was crazy at the time. Here's the money back. I'm sure that will probably happen down the track, to be honest. But if you've been underpaid, that's a different situation to try and get money out. It's almost like it's trying to get money out of some of the ATO's own personal wallets, to be honest. But that's a challenge.
Yeah, that is it's a genuine thing that, like, I'm glad it's in my favour at the moment, but I'm sort of dreading the whole scenario. We, even discussions with my accountant on this is about service companies and how their qualifications and stuff like that. So you just don't want to stir up a hornet's nest, and the problem's not in 2 months' time; it'll be in 18 months' time. So I suppose the lesson there is keep very, very good and clear records. For mine, like we've got about 30 people who, again, it's very similar, but working at a racetrack, and these people were doing like one shift a month, and we sort of looked at whether they were casual, etc., and people were knocked off, and then we copped a whole lot of abuse last week because they said, a whole lot of people had a cup of tea and decided they were going to take us to Fair Work and the ATO, which, my view on that was like, oh God, look, I've got good records and please go and do this, but it's just that auditing process, which I've been through too many times in my life, to say, well, it's just dead time for your business. So, having that information straight away to be able to give back and head off any little bushfires is well and truly needed. Don't trust yourself to, I'll remember. Please, take meticulous notes in this area and have it all filed as to how you're treating these situations, especially around the casual area of employment. Why this person was on, why that person was not on, etc. Like one clear example was we had a person that was working 2 shifts a month for, had been working that for many, many years. But when we look back at it in those initial stages, well, you've missed a month here and missed a month there. And they came back and they said, that was because we were on holidays. And okay, well, now that's been documented. So when we get asked, why did you pick this person? Well, because, many, many years of casual employment. But then we had to throw the other line back to some people who have been quite abusive. Like, there's no nice way to ask for money, but I suppose there is. So, but if you're casual, your shift ends at the end of your shift. That's when your employment finishes. So, that's an area which I'd like. You can get sort of caught up with adverse actions and stuff like that, but I think there's a fair bit of leeway with the Fair Work side of things. But I'd rather handball that to someone like Graham, who's got a lot more expertise in that area. But I think from an employer's point of view, there's a lot more strength from the employers in this, because you're acting on behalf of the government, and there's I suppose a moral high ground you're taking. So
agree. And yet the segue for that back to a member situation where you might have 3 partners in a partnership, or you have a unit trust. You have the puzzling outcome where only one of the partners is eligible for the JobKeeper. If eligibility there, they only pay one amount to the JobKeeper to one of the partners or one of the beneficiaries in a unit trust or a trust, if that's the entity that you're running through. Is that fair? No. Whereas a company, if you're running through a company and you had, say, husband and wife as employees and you're eligible, then both are paid. So actually have had a situation where 3 genuine and non-related partners in a partnership, and yet only one gets the JobKeeper payments. So some puzzling outcomes there, casual or from a HR perspective and from a payment perspective.
Tony, is there any change to that aspect in the JobKeeper 2.0?
Not that I'm aware of, no.
Yeah.
No, I think what drives that is it's this perception that, it's a partnership, for example, husband and wife, and not being sexist here, but perhaps the wife's at home and doesn't work, or vice versa, right? To not be sexist. So, hey, we're only going to give it to one. And yeah, I do have a number of examples of where unrelated partners in a partnership, and yet they only get one, and they are eligible. So once again, puzzling outcomes. And my understanding, Dale, is no, that hasn't. My understanding is that hasn't changed.
Tony, could I just ask a question, please?
Yeah, sure.
Just want to clarify. So 2.0 starts October, November, December this year. I just want to confirm, what quarter is the qualifying quarter? Is it July, August, September of this year is the qualifying quarter that you have to be 30% down compared to same time last year, July, August, September 2019? Is that correct?
I'm just looking at my notes here, and on the webpage there's some great, on the members section there, Kidmans, our auditors, put together a great little snapshot there. Essentially comes from the Chartered Accountants, my professional body. To answer your question, my understanding is the actual turnover for the June and September quarter has to be down by 30% to get the money for the October, November, December quarter. Is this JobKeeper 1.0 ends at the end of, effectively at the end of September. It's just looking at my calendar up here. I think the date's the end of 27th, on the Sunday, the 27th of September. So I've kind of simplified it by, rather than using the exact dates, just look at those quarters. You've got to be down for that full 6 months.
Potentially 6-month period that we need to be 30% down for that period.
Compared to the prior year. That's right. So if we go back to the current situation, you can pick any month against the prior year. And don't forget, there are alternative tests as well. And we've been successful with a couple of clients when you don't fit that criteria, that we've applied the alternative test. But this time it's different. It's going to be the actual turnover. And that's what Ben was saying, the reporting mechanism of that. How is that going to work? It will be checked back against your BAS, because the ATO have that data, your activity statement, your BAS for that quarter. Rolling on, then if you are eligible to be eligible for the next quarter, you have to make sure that you're down 30% for the June, September, and December quarter. So for that full 9 months to get the next period, and that's going to be a challenge unless, as I said, it's that you've really crashed and burned. I see that very few clients, in my client database, very few clients will be up for some of the gyms, some of the cafes and whatnot. But I'm geographically located in New South Wales, outside of Sydney. Whether it be where you are, in Adelaide, I don't know what's happening in those areas.
Again, with no disrespect to the ones that are doing it tough, just for everyone's curiosity's sake, in South Australia, we've had a reasonable time. So obviously, March and April were down. We all crashed and burned. My wash in Adelaide was 60% down in April. My wash in country, South Australia, was 90% down, because we rely on passing traffic. But since then, May was up and June was up, and we're going to have a record July in Adelaide. We've had three days of rain in Adelaide for July, and the numbers have been very, very good. So again, the ones doing it tough, I feel for you.
Yeah, most definitely.
Just a ABC News story just up. Victoria is set to announce 723 new cases today. So there's every chance that at least this state may well go into tighter restrictions, which kind of brings brings JobKeeper 2.0 back into the fray a bit, I think.
Mm.
May well do it. And Doug, in addition to that, I know different states have recovery grants. I quickly looked at the one in Victoria. New South Wales has come out with another one in addition to the original 10,000. So it's and then it filters down to right down to your local government area. Some of the councils are offering reductions in rates. I haven't been successful in applying for any of those. Sometimes it grabs me as it might be a bit of a soundbite, a good little political statement to make, but then to actually get the money out of them is a different situation. And don't forget as well, the federal government's extending that $92 billion at 4.99%, underwritten to the extent of 125,000, maximum 250,000. They're going to extend that to $1 million and shift it from just being working capital to use for the purchase of, for example, equipment. I will say though, every single client I've applied for that, out of the Fat 4 banks, we've been literally been given the middle finger. We have not been able to tap any of that money whatsoever. I believe that they're being given a free kick, the banks, but they're turning it down because there's no money in it for them. But my understanding is some of the second tier lenders are wanting to wrestle some of that money off, them. So there are some opportunities out there, if eligible, to perhaps refinance or even expand.
I've just got one little piece of information, is that I'm in contact with the director at the ATO, and their job is to actually pay out JobKeeper payments to the tune of $6 million per employer, and they might hold it up because of some risk factors, but they're working very well with those people to try and get them the money. But the other aspect they're now doing is that the employees are double dipping, triple dipping, and saying I'll get JobKeeper from 2 and 3 different employers. So just to be cautious as an employer, I would recommend you totally double sure that your employees are not getting their hand out at multiple employers, because the ATO is now sending out compliance checks on those people and saying, give us our money back.
Good.
To the employee, not to the employer. But make sure you got your JobKeeper nomination forms well and truly front and centre, and not the employees not double dipping.
Yeah, agreed, Jean. So it's difficult to know whether people are telling you the truth or not. And as you say, it'll come back to if there's an issue there, it'll come back to that documentation, as you say, to make sure that comes back to the dreaded paperwork to make sure we've got those nominations signed and filed away there somewhere, should that we need to pull them out at some point in the future. And as you say, the high risk area is going to be the casuals, most definitely. Most definitely. Doug, is it okay if I turn to the cash flow boost and just have a quick recap on that? Excellent, good. So once again, cash flow boost, most of this happened automatically. About eligibility was that you were an employer. The first amount that came through, you would have seen it actually hit your bank account. If it was in excess of what your activity statement or BAS was, then they've refunded that amount to you. Otherwise, it could be sitting in your integrated account. I've had a lot of clients say, hey, where's my $10,000? Or there's been some confusion there. And often it's been sitting in the integrated account, either offset against your liability, but I have had where it didn't come out and be paid. So you go in and just jump on the portal and check your integrated or your income tax account and have a look through there, because you may have some money sitting there owing to you, and you can request a refund of that. So that all happened in the March quarter, lodged the BAS, would have got the money in April or May, minimum of $10,000, maximum of $50,000. Currently, we've got the second instalment, which is 50% of the prior amount. So there was some confusion there. Are we going to get the full 10,000 now? So, for example, if you got the full 10,000 in the previous quarter, this time you'll get 50% there. You'll get the 5,000 or 50% of what your PAYG withholding was for a quarterly installer, which the vast majority of car washers members would be. Fast forward then to the next quarter, you'll get the balance, and that'll be the final instalment, and that should be in there in October, ideally rip into your bank account or offset against what your BAS. You have to trigger it with your lodgement of your activity statement or your BAS. Don't lodge it, you don't get it. So there's some incentive there to do that, to do it quickly. Tax consequences on that. Obviously, there's no GST on that because there's no taxable supply. It's a bit of a no-brainer, but we've had that question. But the interesting one is that it's tax exempt. So that actually surprised me. One of my accountants came to me and said, obviously, we're going to show it in the accounts as the money's ripped in as a government contribution. However, we're going to back it out in the tax return, in the tax reconciliation, so you don't pay income tax on it in that entity. But there's some, however, there's some unusual, again, puzzling consequences. And this is on the OTO webpage, and I'm just reading it straight from it here, passing on the cash flow boost to others. So depending upon the entity that you're in, for example, a unit trust, that's one of our car washers put through a unit trust. You distribute that money out, and to the unit holders, it's tax exempt. Difference between tax exempt and tax free. Tax exempt, it doesn't exist. Tax free is that money would come in and sit underneath your other income and push your other income up into a high tax bracket in some circumstances. Tax exempt doesn't exist. However, if you have a company, just reading here, it would be that it would be possibly a deemed an unfranked dividend. So depending on what your entity is, just double check that with your accountant. It was one of my accountants brought it to me, and otherwise I was oblivious to it. Make sure that, yes, it's recorded in the accounts correctly, but yeah, ideally you don't pay income tax in any way, shape or form, unless you fall into that category with a deemed dividend or an unfranked dividend. However, reading it here from straight off the ATO website, we would expect that such distributions would be rare. However, since the cash flow boost is intended to be used to support the business needs of the company and trust, in other words, you're going to spend it anyhow. So that was what the idea of making it tax exempt. Hopefully,
if you paid it out then as wages, that would be okay.
Yeah, but I imagine if it's paid out as wages, then it's going to be taxed in the hands of the employees. So,
yeah.
So I once again, some puzzling outcomes. One of my accountants said to me, how are we going to do this? Are we going to do it as unfranked dividend? It comes down to the entity that you're in, and definitely have a chat to your book, have a chat to your accountant about that money, because the maximum amount's $100,000. Yeah, minimum amount's $20,000, spread over 2 income tax years. Yeah, just touch base on that. Make sure that's been dealt with. You know, 2 heads are always better than 1. There, have a chat with your accountant, your bookkeeper, make sure it's dealt with correctly. Any other questions on cash flow boost?
Tony, just going back, there was a question prior about, do we know any car washers that have actually qualified for the JobKeeper 2.0? Not sure whether you're aware of anybody who's...
No, personally, I have been chatting with a few members in New South Wales, and very fortunate that just the feedback I'm getting from some of the members is that even in Western Sydney, just spoke with a member there just last week. Fiona popped me onto her, and she's doing quite well. So that's why I'm struggling to see where those car washes, unless they're either in a lockdown situation, central CBD in Melbourne, talking to my nephew in Sandringham. He's moved out to Kyneton to be out of that. Nobody's going to the office, no one's going to uni, no one's going to school. So I'm conscious of that. Or as I said, where they've got a cafe perhaps attached to it where it's shut down, then. But I haven't come across any members in that situation. Perhaps Claude's franchisees, I've just been thinking about them as members, Magic Hand Wash, for example.
I've actually seen a couple of hand wash sites closed down, and I'm assuming that's because they just can't social distance on the sites that they're operating on. You know, I think there probably in Victoria will be some car washers or a number of car washers who might be able to apply, but I really can't see outside sort of central Melbourne that, from what I've heard, everybody seems to be doing really well outside central Melbourne. I can't see any others qualifying.
Well, Doug, I was just saying earlier, we had a chat prior to coming on, and Earl, if any members come through and they want a second opinion, I'm always happy to give a second opinion if they've spoken to their accountant or their bookkeeper and just looking perhaps for affirmation. More than happy to do that.
Just sort of on a different note, can I see a smile on your face, Steve Earsman? You've had some rain, haven't you?
Yep,
No, he's not. Yeah, I'll have to unmute you. Sorry, mate. You'll need to unmute yourself.
That better?
That's it.
yes.
Okay, sorry. Morning. Yeah, no, we've had plenty of rain, mate. It's been good. It's been nice. The tanks are full, sitting up the back, waiting to be used if we ever get chopped off. So I hope that doesn't happen.
Well, that was kind of my way of segueing to you, Neil, and just you know, perhaps before we close off, segueing to you about the about our sort of water use survey or project you might want to speak to. And as I said, if anybody's got any questions they want to ask Ben or Tony, they can do that when we wrap up.
Yeah, right. Just thinking about just looking at who's on the line here. I don't know who everyone is, but it seems like anybody from, there should be a whole bunch of people from Victoria interested in the 2.0, I would say. So we may need to run a separate one for those, perhaps. Might be one idea. I don't know. I'm not sure who drives the Melbourne group as much. So somebody might need to get everyone on the line, help them out with that. Look, Doug asked me to speak to one thing. We've sent out a survey request to the membership base, and we've only had a very small response. What about water use? What we're actually, what Doug and I realised when we were talking to most of the water authorities during the drought earlier this year, last year, is that we really don't have any statistics on how much water car washers actually use. And it's a question we get asked quite regularly by the authorities. And also we're not sort of, when we're going into having a discussion, like we had a ministerial meeting in New South Wales, it'd be nice to be able to dump that information on the table to say, well, our users are using a small amount of water compared to the rest of the commercial uses within that jurisdiction. So depending on which water authority we're talking to. So what we've been trying to assimilate is some data on car washers about their water use. And what we need is as many people as possible to send us through some water use, their water bills from their water authority, and we will take that information and just de-identify it, but just identify it to the water authority. So for me, or for those in Western Australia, it'd be most times it's Water Corp. So we would just say it's Water Corp Metro. We'd take your name off it. We just want to know you know, whether you're running 1 auto, 2 autos, how many self-serve bays, and then we can start to build a picture of what a typical car wash uses in litres of water. And that'll be really useful for us to fight back against the water authorities, given there will be another drought. It's just a matter of when. So we really need everyone's support to try and rally that up. Doug's had only very few responses, and as usual from the typical people who tend to respond to everything. So it's one thing we're trying to get fired up. It's a little bit hard when we're not having meetings and things, although I'm pretty sure we could probably have one in Western Australia now without any dramas. So yeah, it's just something, if you haven't supplied it, hopefully you do. I mean, hopefully most of you actually receive your water bill from your authority in a soft copy, and all we need to do is forward it through to Doug. That's all we need, and a bit of info on what your site is. So it's a 5-second job if you've got a scanned copy of it already. So if you've got it from a soft copy from your supplier, or if you're just sticking it into Xero or one of these other accounting packages, then you might have a soft copy. All we need is that. We just need the front and back of it, and it'll really help us. So Doug and I have sort of made a pact between ourselves that we're not going to just sit back and wait for the next drought and then start assimilating information again. We're going to continue to work in the background, getting our ducks in a row should there be another drought. That comes down to things like the arguments we have during these emotive times about, you know, how much water per car, etc. There's no point doing that when the drought's actually happening. We need to have those conversations prior and have it set so we know what happens when we go into a drought situation. Because as we found out the first time back in the millennial drought, and we found it out again this time around, is that, you know, if there's a drought, we'll be one of the first industries attempted to be shut down. And Tony, you can probably talk to that better than most, because he was in that New South Wales, Newcastle area. We had a couple of very, very active rangers who were trying to shut everyone down.
And effectively did, as you know, Nell, shut down on Christmas Eve. Jenny up at Tuncurry car wash members and David up at Gloucester, just unconscionable behaviour, threats, intimidation.
Always seems to happen, doesn't it, Doug? Over a busy period, a holiday period, something or other, is when the phone starts ringing on these issues as well. So we just want to be organised. So it's just a request from everyone. If you could, we just need a water bill. We just need one water bill for a period. We can basically, if we get enough, we need probably about 300 or 400 sites. And if we can do that, then we'll have enough information. We can extrapolate it out to the industry, because we know roughly how many sites there are. And we can make an extrapolation, and then we'll have information. Because if we say to the water authorities, how much water does our industry actually use, they will not answer the question. They will not do it, because they know it's absolutely bugger all. And if they give us that information, you know, we'll be able to say, well, that's less than 1%. So why are you picking on us? Now, we push that line anyway, because we're pretty sure it's true from work done previously, but it'd be really nice to have factual information. So that's what we're chasing.
Okay. Unless anybody's got any questions, as Tony said, I'm sure he or Ben be happy to correspond with anybody who's got a question privately. If anybody wants to raise an issue, now is the time to do it. I guess we may be sort of jumping onto the 2.0 issue a little early. I guess we've got to see what happens with various state shutdowns over the coming months, and we'll try to keep everybody involved. Just really quickly, any Victorians in the group here? We're sending out a communication this afternoon about new reporting obligations to WorkSafe and COVID on your site. So that will go out today. If anybody else has got any information they'd like us to disseminate to members about, I guess, any issue, we're all ears and happy to hear from you. You can either phone or email Fiona or I. But unless anybody's got any questions, we'll sign off and thank Ben and Tony in particular for their time and information this morning.
Oh, my pleasure. Thanks, Doug. Thanks,
Yeah.
everyone.
Yeah. Thanks, guys. Thanks, Ben. Thanks, Tony, for all your info. It's great. Cheers, guys.